Good morning, everyone. I'm Vince Lancy. In today's market rundown, we have a lot of ground to cover. Once again, it's a light data week, but it's a big news week. Title, tentatively, Silver Stackers, covering a report by RBC. And gold is now the ultimate asset, paraphrasing a BOA report, which we're going to review a little bit here. Again, news out last night as well. So let's get right to it. The dollar is 103.64, down 12. 10-year yields are 4.10, unchanged. S&P 500 is 58.56, up 13 and change. The VIX is 19.13, unchanged bid. Gold is 27.11, up almost $20, near the highs of the evening. Silver is 32.13, up 44 cents. Moving along with gold tonight. Copper, 436.80, up 5 cents, not holding silver back. WTI is down 38 cents, 70.77, 70.77. Natural gas is 225, offered unchanged. Bitcoin is up 480 at 67,800, and Ethereum is 26.25, up 22. Platinum, palladium are up uniformly. Palladium 1059, platinum 1009, up 16 and change and 15 respectively. Grains are mixed. Again, wheat is the contrarian one. Soy 998, unchanged bid. Corn 4.00, up a penny, and wheat down a penny at 600.3. Okay. We start here. Yesterday, or 2 days ago, I'd say, we said that the U.S.-China synchronized tsunami is here. Well, last night, China announced, the PBoC, the People's Bank of China, announced another step towards liquefying their markets. And what they did specifically was that China is very under-financialized, right? If we're over, they're under. And what China has done is they've made it available for select banks, brokers, and probably people too, to take what they have, whether that be government bonds, central bank bills, and pledge them to the PBoC and get money to buy stocks in the capital market. The bottom line is the PBoC is making it cheaper for these institutions to finance stock purchases. Culturally, stocks have been doing so poorly for so long that banks and investment firms have been reticent to put money into stocks. And so any leverage they have, they would put it in something that was more conservative after having gotten burnt for a while now. But they're really making an effort to liquefy the markets. And that's what happened. That's what's the trigger for last night. So we'll give you a quick look at that. That's the Hang Seng Index, and this is the 1 hour chart. This is what happened last night. So it's in the process of recouping what it gave back. And it's up 3% or some or what have you. But that leverage that you're allowed to, the money is, they're changing the market structure. The money is supposed to go into stocks. But what it does is it frees up capital that you have tied up in other assets. So you don't have to sell gold to buy stocks. So it basically raises, they're doing what we did in a delayed fashion, but they are doing it. Oops, sorry about that. Here we are. So there's the homepage. Let's move to the two stories. But before we do that, I just want to very quickly just go through a chart update. 2 days ago, I also mentioned that this was a V-shaped bottom. And it's a measured move that we should go higher. And then I put a post up saying not yet. It should have stopped there. Well, it looks like yet. 27.24 is my personal target. I do have a position, a speculative trading position based on that formation to augment my, responsibly long position forever. 27.41 would be a target for me. But my targets pale in comparison to what Bank of America is saying now. There's a picture. They have a new report out. We haven't seen it yet, but we have seen enough of it, sections of it, to make an informed comment. So Why don't we run through that a little bit? This is hitting all the press, right? I mean, this is something that they put out there. All right. Reading from a story covering it, we have that story for you as well. With the U.S. national debt ballooning to over $35 trillion, analysts are starting to question whether traditional investments like treasury bonds can still provide stability. You can see that on the screen. The questions they ask in a report are, can gold really replace treasury bonds? And they talk about the U.S. debt crisis. The title of the report is gold a safer investment than treasuries? And the note is titled, as I just said, Bank of America's commodity strategist, Michael Widmer, said that fears over debt levels in the West, everywhere, but in the West primarily, will be gold's key driver going forward. Widmer explains that this is turning investors away from traditional safe havens like treasury bonds. In his words, his quote, with lingering concerns over here, we'll give you the picture there. With lingering concerns over U.S. funding needs and their impact on the U.S. Treasury market, the yellow metal may become the ultimate perceived safe haven asset. Now, that's an extremely important statement. Forget the cliche, the yellow metal, safe haven. The key phrase in that statement is U.S. funding needs. That's the key phrase. All right. Bank of America in the report sets the price target for $3,000 for gold by the end of the year, not by Q1 of 25, not by the end of 25, by the end of the year. So we'll give you a couple takeaways on this. If Goldman's report, which we featured here 2 weeks ago, was a warning of what was to come, then this is a full-on wake-up call to the American investing masses to buy gold, and you must expect the other banks to outdo each other from now on. So Goldman took their first shot. Bank of America just made their case. Next is Citi and JPM. Sell season, which ends a little bit before Halloween. We're in a gray area now. Has run into buy season simultaneously. Sell season, they've been selling. Macro discretionary has been offloading some of their, like, taking some profits, selling a quarter, selling a third, selling a half, but it's been absorbed by, well, the American investor. Okay, ETFs are loading up. If you, I don't have the chart handy, but if you look at the ETF drain compared to the rallying price, we have a lot of ground to cover if that's going to happen. Okay, expect between now and the end of the year, gold will be bought by RIAs, CTAs, and smaller hedge funds every step of the way. Now, while that party may cause a hangover in the first quarter of the year, it will not be the end. Now, this is just the cautionary tale embedded with the absolute insane bullishness going down the road. Okay, so we could have a hangover, right, from what's about to happen. It will not be the end. It will be the end of the beginning. So this is not the oh, they're going to make us hold their bags. I mean, there's bags, right? But that's short-term stuff. We're not short-term players here. Let's not forget why this is happening. Remember that phrase I said, funding needs? Let's not forget why this is happening. Number one, mistrust in the global economy dominated by a weaponized dollar started this, which forced nations to seek alternatives to the U.S. treasuries as a store of value that does not play favorites. That would be gold, which caused those nations and their trade partners and their trade partners to liquidate U.S. treasury holdings and reallocate some of those funds into gold, which makes it impossible for us to borrow at the rates that we borrowed at before, right? So we either have to drop our standard of living by spending less or facilitate higher inflation due to the increased interest cost. Your auto loan just came due, and now you have to finance it 5% higher. So what are you going to do? You're going to call in some favors, ask your G7 buddies to park it there for a while, and you're going to hope for the best. And if you don't get the best, you're going to debase your currency, which makes it impossible to refinance the deficits we have without a drop in standard of living or, again, higher inflation costs, which makes the people that started selling treasuries before sell more, because as default by debasement risk becomes a top of mind worry. Those things are not going away. There is no cure except spending less or defaulting or printing more dollars. So this market will get ahead of itself. It will. BRICS hype will grow. Election fears will propagate and uncertainty will continue. But this is the end of the beginning. It's not anywhere near the end. Remember the three waves of inflation? So that's my spiel for that story. And we don't have the report, but we have a nice write-up by Bloomberg excerpted at the bottom for premium. Moving to silver, RBC Stackers report. Now, I haven't seen a good piece from RBC in a while. It's not to say they haven't existed. I just haven't seen them. But RBC is one of the banks that we all cut our teeth on when we were trying to figure out how precious metals work. Scotiabank, Scotiabank, RBC. Well, RBC is back with a really good report, and it's a complete analysis of producers, developers, their production costs, their supply sources, their demand breakdown, and more. It's very data heavy and very chart heavy, but these are some of the key points they make, and I'll show you some charts as well. Silver is matching gold's year-to-date plus 30% gains, though with higher volatility. That's not a surprise. Deficits should persist on growing solar demand. Silver ETF holdings are up modestly year-to-date after significant outflows from 2021 to 2023. Gold's leading the charge on that. Silver will follow up. Equity valuations for silver producers have pulled back versus gold peers, which is interesting. I see that as gold miners finally starting to be noticed, and silver miners will come next. Silver M&A is also heating up following the recent AG Gatto and CDE SIL deal announcements. Let's take a look at a couple charts, give you an idea. I'm talking. They go through the whole industry. It's like the metals focus report, but there's more. There's a lot more in terms of charts. So here's a couple examples, right? So there's valuation based on grade. There's reserves and resources. There's several like this, and it goes through all the miners. It goes through their valuations. It goes through their all-in costs. Very good. Here's silver ounces held in the LBMA London vaults, and mint and bullion coin historical premium versus spot silver prices. And you can see there's a lot of really good historical data here. Silver industrial demand broken down by sector, as well as we have the investment demand, but they do a good job breaking down silver by sector, especially on solar. And silver supply, where it's coming from, we know where it's not coming from, right? But they go through it by nation and by primary metal. There's a lot more charts in there. I'm just giving you a sample of this report. It's very good, and I recommend. Look, it's RBC, right? It's good to have them back, right? All right, let's move on. News and analysis. Yesterday we put out a post called "Nobody Likes Palladium. They are nuts to be so bearish." That's our opinion. Palladium is no bank likes palladium right now, and I think that's an alarm bell for me. Although I don't have anything on a palladium, especially since it just broke the 200-day moving average and is above it, and equally significantly, the 50-day moving average just crossed above it. So we're closer to a bottom than a top, in my opinion. All right, yeah. So there we go. Today we have housing starts, which is important. But it's not going to stop what's already happening. Final market check, and we do have the RBC analysis to share with you, and we do have the Bloomberg terminal write-up as well. We have it all today. We have everything we can give you today so far. All right, so here's gold, the hourly chart. You can see this is just, there's an accumulation. It's the tsunami, right? I can't, just to contradict myself, I can't believe Powell's going to ease again. I just can't believe he's going to cut again, but he probably is. Politically driven stuff. All right, so let's take a look at silver on the shorter term. 4 hour. Okay, so I had mentioned that above 3150, let me see if I still have these lines in here. Yeah, above 3150, 3250 should not be a problem. And you know what? It's becoming a problem. I underestimated how much these people would sell silver to finance gold purchases. And this is a full-on speculation for the BRICS in the election. No doubt in my mind. But you have to be aware of it. So now I'll give you, so 3250 in my mind should have happened faster, and it hasn't. Right. So now I'll give you the second layer now. Talking about measured moves, the dip and the rally. Well, silver's doing the same thing gold's doing, only a little slower. So dip, measured move higher, dip, measured move higher. So I'm now saying that above 32, say 15 on spot, we should add another 50 cents to it. So now I'm looking at it like above 31.50 should get us to 32.50, and it hasn't, right? It had a couple knee jerks up there, but it never really, like, right here, but it was met with selling as people just continually, sell silver to buy gold, sell copper to buy gold. But I think that's done. All right. So the pause is right here. Above 32.15, let's say on a closing basis, now 32.50 should hit. Why? Because now I'm looking at a different configuration altogether. I'm looking at this as a measure move upside to that. So if gold hits 27.24, which is my personal target, my private target, then silver should start to make its way to 32.50. One other item of note, I haven't seen a lot of BRICS hype yet, but there's news coming out now. Now there just about the BRICS thing here. There are 4 pillars. Let me put our front page back up. I think it might be on the front page. There are 4 pillars. No, it's not there. It's rolled down. There are 4 pillars of the BRICS plan. Enbridge, right? SIPS, which is China's version of SWIFT, right? BRICS Pay seems to be what they're going to be talking about. One of the things they'll be talking about. And BRICS Pay essentially is, it's an ability for you to go from one BRICS country to another and pick what currency you want to pay in. So it's a foreign exchange credit card. And the interesting thing about that, and I'm throwing this in there because I haven't confirmed that it's true yet, but the drop-down list on it includes gold as a currency. So you can pay in gold. Now, when I say you can, this is hypothetical, and it's a work in progress. It's not done yet. But what they're really doing is you go traveling to another country on vacation, right? And you have to exchange, dollars for euros or whatever. Well, the card does it for you. Now, that technology is not new. That's off-the-shelf technology. But what they're doing is they're taking Western banks out of the middle, and they're putting probably their own bank in there, but they're putting a more hopefully a more efficient thing in there. So it's a way to cross borders and retain usage of your own currency. And they're kind of transferring. It's kind of like if you were to go into Starbucks and you were to say, I want to pay in Bitcoin. You don't pay in Bitcoin. Well, maybe you can now, but you don't pay in Bitcoin generally. The Bitcoin gets sold and then the cash, right? So there's 2 transactions there. They're going to do that for you in one transaction. So it's kind of like an alternative to Visa and MasterCard. Russian Express, don't leave home. The old joke. Anyway, Russian American Express. All right, so gold's up 17. That's it. I'm Vince. Happy Friday. And we should close on the highs this week, knock on wood. See you later.